What is today's news telling us about Bitcoin? Bitcoin just touched $80,000. But the interesting part is in the number because Bitcoin didn't suddenly become more useful over the weekend. Nothing changed in the code. There wasn't any giant announcement. What changed was the environment around it. And that might be the bigger story behind this entire rally. Over the past week, Bitcoin has climbed over more than 20%, its strongest run in years. At first, you can look at that and say, this is just another crypto rally. But look underneath the price, and something else starts appearing. Money is becoming more willing to take risk again. The US Treasury has been discussing a large purchase of longer term government bonds that help push more Treasury yield lower, while the dollar recently fell towards 3 months low. And when yield fall and the dollar weakens, assets like Bitcoin suddenly become more attractive. That's why one analyst described this move perfectly. This is becoming a macro story, not simply a crypto story. And that distinction matters because if Bitcoin were rising only because traders were excited, this rally could disappear just as quickly as it arrived. But there's another piece of evidence. Real money appear to be returning. Last week, US spot Bitcoin ETF recorded nearly 2 billion in net inflows. More importantly, investors put money into those funds for 5 consecutive trading days. Think about what that means. For months, one of Bitcoin's biggest problems wasn't that people hated Bitcoin. It was that large investors simply weren't buying aggressively. Now that flow is beginning to reverse. And ETF matter because they give traditional investors one of the easiest ways to move large amounts of capital into Bitcoin. So when Bitcoin moves towards the 80,000 at the same time, ETFs demands return, the rally begins to look different. It stops being only traders chasing price, starts looking like a capital coming back into the market. But there's still one more piece. The regulatory environment around crypto is changing too. Last week, the SEC proposed something called regulatory crypto assets. The proposal will create a specific rules for certain crypto offering and could provide a safe harbor where some crypto assets would not automatically fall under existing security rules if they meet certain conditions. That may sound like boring regulation, but markets care deeply about uncertainty. For years, companies looking at crypto had to ask, what is happening if rules change? What happens if regulators decide this asset is a security? What happens if we build something and it gets sued later? Every unanswered question increases the risk. Clear rules don't guarantee Bitcoin goes higher, but they can remove one more reason for institutions to stay away. Now, let's look at what's happening all at once. Liquidity expectations are improving. ETF money is returning. Regulatory uncertainty is slowly declining. And Bitcoin is testing the $80,000. Those are not completely separate stories. They are different parts of the same story. There is one reason to stay cautious. Some of this rally was also driven by traders who had bet against Bitcoin being forced to close those positions as price move higher. That kind of short squeeze can accelerate a rally very quickly, but it cannot sustain one forever. So $80,000 itself isn't the real test. The real test comes after $80,000. Do ETFs inflow continue? Do investors keep buying once the short squeeze fades? And do falling yields and easier financial conditions continue supporting Bitcoin? That's what will tell us whether this was simply a violent recovery or the beginning of something more important. And there's another interesting signal today. Strategy, the largest corporate Bitcoin holder, raised roughly $2 billion from selling shares last week, but it didn't buy more Bitcoin. It didn't sell any either. It's holding remaining at 80, 40, 447 Bitcoin. That makes this moment even more interesting. Bitcoin is climbing without needing one of the biggest corporate buyers to push the market higher. That demand is coming from somewhere else. So, what is today's news telling us about Bitcoin? Bitcoin may be moving back into a position where the world around it matters more than anything happening inside crypto itself. Interest rates, bond markets, the dollar, institutional capital, regulation. Those forces are beginning to line up differently than they did just a few weeks ago. And Bitcoin is responding. The level to watch now is not simply $80,000. Watch whether the money keeps coming in after the excitement phase. Because breaking $80,000 gets attention. Staying there will tell us something much bigger.